Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Good morning, good morning. Good to see everybody. All right, so a couple things to mention. We do have the aftermath, if you will, of the retail sales numbers. Retail sales is kind of a big deal because one of the metrics that will matter to the macroeconomic trend. All that is a multisyllabic way of saying, what is it that we are expecting the Federal Reserve to do? And in the case of things like core retail, new home sales, existing home sales, one of the ways in which we know the data could pressure the Federal Reserve to at least give the one, if not two rate cuts, is to see that consumer purchasing, consumer employment is struggling. So one of the things that we'll look at would be, and let's jump on over there, would be, let's see. Oh, the mic is acting weird. I am on a different platform. Give me 1 sec. Let me see if I can't change the mic. Nope, that should be it. I'm just on a different browser this morning, gang. So just kind of bear with me with the audio this morning. Thanks. All right. So if I'm taking a look at what's going on with consumer discretionary spending, well, take a look. If the consumer's buying homes, stuff, it's going to be important. And you can see here at 8:30 a.m., we had the core retail number and the retail number, and they were better than expected. So I'm a little bit, normally, disappointing data is going to be bullish. So this is one of the first inklings that I've seen where indices are up or just minorly floating higher. Let's not call this a huge move in any way or even a huge reaction, but slight move higher on this data. And this could be really a rebounding effect from yesterday more so than anything. The one thing that does have my attention this morning is the Dow is still really weak. And that means that there are sectors within the Dow, think industrials, transports, energy, healthcare, financials, omit tech, because even though that's the second heaviest weighted sector in the Dow, we know that's more of an S&P and definitely a NASDAQ weighted sector. So the Dow is doing its own thing this morning. As I take a look at the intraday charts, the 5-minute time frame pre-market, Russell is above the previous session close. Dow is below it. S&P is above, NASDAQ is above. So it's on its own journey there. All right. So with that being said, if you have any questions, feel free to type them in. And Jay Trader is asking about UNH. Sure. So if we take a look at UNH, it belongs to healthcare. Healthcare predominantly belongs to Dow and S&P in terms of weighting. I would say this. So Jay, one of the things that I will do consistently in my trading is, rather than ever starting with the idea that I want to trade UNH, and looking for a setup, it's got to earn its spot on the watch list. And if I take a look at all the other stocks in healthcare at the moment, UNH would just be a no. What would be a yes then? Right? There's no setup for me other than maybe long puts, which I'd rather frankly not do because the XLV has been pretty strong. So I don't want to find and focus on weaker names like UNH, Merck, Thermo, Danaher, Pfizer. Those are names that I just won't end up putting on my watch list. So what I would say is focus on any of the green names. And that's where I think it's really important. And rather than me saying, hey, here's the setup in UNH, I think it's really important for me to say, I don't have one. Now, that's not to say there may not be a setup in the near future, but on the daily time frame, I simply don't have a setup on UNH. All right. Thank you for the question, because I think it's a really good idea, Jay. Really good idea to keep on healthcare, maybe shift to those bullish names. All right. Next up. Okay, volume is pretty good. Jas asked, do I ever take a vacation? Jas, I do something twice a year, and there's a group of writers that I like to go hang out with twice a year, and that's my idea of a vacation. I like productive vacation. Sitting on the beach is just, I live in Florida, right? I could drive 20 minutes and do that. Do I ever take a vacation? What do I need a vacation from? This stuff can come with me, right? I remember we took my mother-in-law to Costa Rica for her, I guess it was her 50th. And maybe it was another one, 55th, whatever. It was a birthday. And I took my charts, I took my laptop, I flanked that with 2 mobile monitors. And before we started our day, I'd take a look at the charts. I love what we can do. I had my phone in Costa Rica. I had my toss and it was running. It could give me alerts. I could take it wherever I go. That's what I love about trading. Yeah, right. But no, I don't particularly like to vacation. All right, next important questions. No, I appreciate. It brings up a point. Can your trading style handle being away from the screens? Now, you may not want to trade. That's one thing. But I want an effective way to trade regardless of what's happening in my life. And one of the things that does really make that possible is the automation of the tools that I use. That helps a ton. All right, so let's get to it. Airbnb, sure. Let's take a look at that. And every time, again, when we're looking at individual symbols, I'm always going to move up the food chain and make sure that I'm looking at other symbols that would be in a group with, say, Airbnb, to make sure it's a relative outperformer. It just had earnings. It is now post the rocket launch that we saw with the earnings reaction. It is moving higher, but I'll never buy into bullish momentum. I just don't hate my money. What I will wait for is a pullback. I, at the moment, don't have a level that I love, but if I'm going to start to work that up, this is what I'll do. I'll pull a retracement from the last major move. And I won't even likely think about it, Justin, until it gets down to at least a 50%. Now, that doesn't mean on the 1 hour, I may not in the future have an Airbnb setup as a short-term swing on a 1 hour chart, but that's going to be a little bit more of a shorter time horizon, 1 to 3 days. That's going to be something that I'll monitor session after session. The Airbnb, it's got a lot more to go down to before I can put on a swing there. The only other thing that I might consider would be waiting for one of my favorite price patterns, and that's known as a minor low. And that's a lower low candle surrounded by 2 higher lows. So it's going to take at least 3 sessions to develop that. All right, Airbnb, that's okay. So that's something that we could keep an eye on, but those are specifically, Justin, a setup is a set of circumstances, right? That if those things happen, that's when I'll do something. And that's my plan if there is anything to do with Airbnb. All right, next up is, got a couple requests for Alibaba. Okay, Jolie and Max. Alibaba, let's pull that up. What do we have here? Again, another earnings launch. Gang, let's talk about earnings for a moment because both these stocks are affected by earnings. The way that I've found that makes the most sense for me to look at earnings events as a high volatility explosion sometimes, it's a spectacle, right? Is I'll look at BABA 4 to 6 weeks before earnings. And I'll look at it as a catalyst-driven, trend-following swing trade. And that means the run-up into earnings is the window of opportunity for me, not the earnings release itself. I don't find earnings to be something that make any sense to trade. Their probabilities are probably on par with buying a lotto ticket, right? And so I'm just not going to do that. However, take a look at the gorgeous run-up, right, into earnings where I would get flat on earnings, but I take advantage of that move higher, waiting for swing setup. So I'll have to let the dust settle on that one. I'm never going to make a decision about what earnings are going to do. I'm never going to put on a trade for earnings. And I will always let 1 to 2 trading sessions go. Just let the dust settle, and then we'll see what kind of clarity we have. Again, my life is perfectly fine without making speculative bets on what earnings are going to do to a stock. In fact, I'd rather just steer clear of that mosh pit. All right, Occidental on the daily. It's still very choppy. I would say I'd pass on Occidental for now. Again, if we're looking at different time frames, I'm going to focus mostly on the daily when we're talking here. But if there's a different time frame you're looking at, that can change the structure of what Occidental is doing. Each time frame is almost an independent symbol, right? If we have Occidental at the top of the food chain here, there's different looks, different slices of psychology for this stock. And until I find a slice of psychology, preferably trending, I'm going to leave it alone. There's a lot of other names at the moment that are trending. Great question. XLF. Hey there, Trader Galaxy. XLF, I took advantage of Citi yesterday, but XLF was another cool setup that I walked through in the room. And I think a couple traders did take it, but I did not set this up and send it as an alert. But here's what the setup was. And I just took a stronger stock, what I see based on structure to be a stronger stock in that group, and that was Citi. So I do have a long position, so kind of the same thing. Yesterday, we had a massive sell-off in XLF, what I call a candle of unusual size. So if I look at the last 4, 5, 6, 7 candles, yesterday's range was 2x many of them. All right, but what we did do, and this is based on, let me grab my drawing tools here. This is based on historical volatility and a standard deviation move. And this was an unusual move, which tends to be exhaustive. So if I'm going to take kind of a risky, but risky in that the volatility is high, but not risky in terms of necessarily the setup. Here is where the 68% probability is. This is most of the time, this is where we're going to function if there's a range to be had in XLF. This is my price movement range of support. But here's the first standard deviation. Here's the second. So there's a line, you can see here, right there, and right there. We hit that second standard deviation perfectly. That would be an extreme move, definitely the lesser probability of movement, but that would be an extreme move hitting support. And what I told traders was to keep an eye. Just like you can see, the automation's beautiful, 5106. So it was that pretty much or nothing for XLF. And it's bounced up pretty nicely since hitting that kind of extreme. So that's what I'd be looking at on XLF. I will buy that dip. I will focus on buying that dip. Like I said, I just went with a little bit more of a boat versus the tide by taking advantage of Citi at the lower end of its movement range. This was our setup. One trigger here, one trigger here. And that's what we were waiting for price to reach. Thanks for the question. All right, moving on. DVN, KS, DVN. So Devon's interesting because it's going to be sitting in not just kind of this sensitive to crude oil type of group, but it's also going to be sensitive to natty. Natty's been on the move, natural gas. Devon at least has some consistency in the bullishness. It stayed that way since earnings. Devon would be a reasonable, a little early. 3 more green candles would give me far more bullish, firmer footing on buying a dip. So I would want 3 more green candles, which means maybe Tuesday I would look at it again. However, what I would also say is that once the green candles emerge, it's not a hard no. I just want more green candles to say this is the best kind of characteristic for follow through. But you can start looking at buy the dip based on those gray zones that I rely on in DVN. It's more bullish than not. Just be aware that this is a fragile, bullish environment with a lot of resistance at around 38.75. That's going to be upside resistance on DVN. All right, next up is Starbucks. Beautiful trend. All right, we're looking at a trend here. So James, beautiful trend. One of the outperformers in consumer discretionary. Consumer discretionary has been struggling a little bit. However, so here are those criteria I was talking about. What did I do with my drawing tools? Here we go. 1, 2, 3, 4, 5. So right here, that's my 5th green candle. I don't have a trend yet, but at least I have the 1, 2, 3, 4, 5 green candles that occurred once the candle on January 24 closed. That means that Starbucks is open for buy the dip. Oh, but wait, one thing to keep in mind, got to wait for this earnings nonsense. So that means waiting 2 sessions. And that means that I'm really looking at no. The first day the Starbucks becomes a buy the dip would be right in there. And that was specifically the 31st. And look at this. By the 31st, I also have, look at my multi-structure down here, which automates trend recognition. Boom, that lower row has gone green. And now it's time to buy the dip. And you can see how many times the buy the dip has triggered. And if you buy at the low of that, buy at the support, right? Moving higher just in that affords us at least the choice to scale out at some kind of profit or things like that. Okay. So that's Starbucks. And again, I think what's so important about automation is when I had a mentor early in my trading career, I had 3 of them. I had 3 mentors that really changed my life. And I had mentors in books, but I'm talking humans, right? Humans that were able to give me feedback, humans that were able to walk me through their process. And probably the most important thing about having a mentor, not 9, I never had more than 2 mentors at once. And usually it was one mentor at a time throughout the early part of my career. And, as a saying comes, when the student is ready, the teacher appears. I was very lucky. So what my mentors were able to teach me was being able to see what they saw. Now, it was harder back then. We didn't have the automation, but remembering that it's really important for you to be able to see that these are automated. So this isn't my using 35 years of experience to see things that time has trained me to recognize. How do I shortcut, download matrix style, right? How do I jack you into the matrix like Morpheus did to Neo and say, hey, this is what I'm seeing. And you wake up and you go, I know jujitsu, right? It's the automation of the tool. So you can see right here, these are the opportunities, right? But the important part is putting the tools together. So it's not just this, it's this plus the green candles plus the bullish structure. And I would be fine continuing to look to the long side, all right, on Starbucks. And hopefully it makes sense as to why. All right, next question is Boeing. Boeing is just really, it's an interesting journey. It's very volatile. It's not an uptrend. It does have the green candles. So if I'm comparing the best part of my watch list, lists that have a trend and the consistency of the green candles versus lists that are green candles but no trend, this would sort of be a second tier, but it is buy or nothing, right? It's got to be that binary. It's got to be buy or nothing, all right? Yeah, exactly. MX, when the green meets the gray, time to buy. Right, exactly. All right, next up is LNG. Sure. I'd leave it alone. In fact, it's trying to turn into a downtrend. Again, I'm going to be a little bit more bullish. My preference is typically, look, gang, I'm not saying the short side doesn't make money, but if you're looking for follow through, and I'm not just talking about today or tomorrow or even yesterday, for the last 18 months, for the last 12 months, typically we're going to find that there is a natural drift to the equity markets, and that's up, especially when the Federal Reserve has been accommodative. And frankly, gang, they're not necessarily done yet. We're expecting at least 1 or 2 more rate cuts, but not until summer. So we're going to have a prolonged period of time, likely between now and July, before we even see another quarter point cut. But it's waiting out there in the wings. Tough to be a bear in anything. I'm going to prioritize bullish setups. I'm going to respect the new high on the S&P. I won't buy those new highs. Again, don't hate my money, but I will look for those pullback buys. All right. Next up is Julian asks, is it too late to join the mastery? Oh, the immersion? Julian, I don't know. What I would do, Julian, is pick up the phone and call. Hang on, let me. I would call the office because I'm sure they can figure something out for you. There's 2 things I would recommend you can do. And the best way to actually do this would be to ask the office when you call them, and the number's up in the right-hand corner here, 512-266-8659. Julian, what I would do is give them a call, tell them I sent you over there, and ask them if you can join the immersion, because that's going to be probably the best way to get your footing in the Sector Secrets Mastery. We do have the store-wide sale going on right now. So if the immersion, if for whatever reason, I'm sorry, is closed, but ask them, go ahead and pick up, a quarter or a year of the Mastery while it's on sale. That would be the best way to do it. But give them a call and ask them about the immersion, or just pick up the Mastery while it's on sale. Okay. So that's what I would say. So there's 2 ways to do it. We just finished that whole workshop, webinars and promotion for the immersion. I would definitely recommend, if you can get into the immersion, do it. All right. So let's see. And yeah, MX, it's never too late, right? It's never too late. But I always try to find ways where if we have a class going on, and that's what we have a class that's going to be 1-hour classes for the next 3 months. That's why I say try to get into that immersion. But yeah, everyone can join the Sector Secrets Mastery whenever they'd like, but that's definitely where you're going to get the best bang for your buck. All right. Is there an optimal number of open positions? Vlad, there are times in trends where I'm going to have an embarrassment of riches. We're going to have so many trends. We get to pick from the best. I tend not to like at the same time open more than 7 to 9 positions. Now, so much of last year, whether that was Q1 or even the beginning part of Q4, there were so many. I got a very loud bird out here, excited about charts and coffee. There were 2 quarters where we had screaming uptrends, very bullish environments, rising tides across the board, and it was very common for me to have 7 or 8 open positions. Right now, it's not as widely participated. This is what we have going on right now in the mastery. Those are my open trades. And actually, I forgot to add Citi, and I sent it out as an alert. So the other position that's a new open trade is Citi. So when I send this out to members, so what I'll have is new trade entry. So I give everyone what we're in. So that's what it looks like as of Thursday. So you can see we have quite a few positions open. As we started Thursday, we had a winner in XLF that we closed out. And then I still have GLD, which I'm going to close out today. I'm going to have to, because notice February 21 expiration. We paid ourselves on GDX yesterday. Thursdays are always kind of an interesting day in my office because we have a lot of meetings. And we did have a T1 scale out on GDX, or you could move to break even. So those were some choices that our members could make with GDX yesterday. It was an optional T1 scale out. Now notice I didn't take it. I just moved to break even, but I'll give everyone updates. So you'll get alerts. Hey, these are your choices. And look, my thing is I'm going to present to you the same choices that I'm considering. So the alerts are not just, hey, this is what I've got, but it's also, hey, this is what I'm thinking about. Boy, that bird is loud. All right, so that's kind of a look at how active I'm going to be in this current environment, which frankly isn't great. A lot of chop, a lot of uncertainty, a lot of macroeconomic uncertainty. And oh my gosh, it's 9:24. I got to shut up. I got to shut up. Anyways, great questions here, gang. I appreciate that. I will see you all on Sunday for Top Tier Outlook. And in the meantime, have a wonderful morning. All right, be good to each other.